Hi guys, so in this video I want to talk you through the IML Harmonic scanner, and this is a complete beginner's video, so there's a whole lot more that you can do with this tool. I'm just showing you the basic introduction so you can start and play around with it if you're new to IML. So the IML Harmonic scanner is a tool that looks for harmonic patterns like this one in the chart. So it scans the charts and looks for these harmonic patterns, and then it gives us the numbers for our trade setup, as you can see at the side, and I'm going to talk more about those shortly. So when you first log into the Harmonic scanner, it's going to bring up the most recent pattern that it's found. So you may be wondering, how do we know what pattern we're looking at? If we come up here to the top left, it first of all gives you the pair. So this is the Euro GBP, which is the Euro and the Great British Pound. It gives you the kind of chart we're looking at. So this is a D1 chart, and what that means is that each of these candlesticks represent one day. So as you can see, this is quite a lot of days worth of activity on this chart, and each candlestick is one day. And then it tells you the kind of pattern that it's identified. So this is a bat pattern. Now you don't really need to know what the patterns are called in order to use this tool in the beginning, so don't worry about trying to remember those. So this is our first trade setup potentially. So what we would do is we would move the pattern over, and we just drag that over, and that allows us to see the numbers at the side a little bit better. So firstly, if your take profit numbers 1, 2 and 3 are below your entry price, that means that this is a sell order. So what that means is that we're expecting this chart to come down. If your take profit numbers were above your entry price, that means we're expecting this chart to continue to go up, and it's a buy order. So the numbers given here are exactly the same as what you would get with your Swipe Trades app. You get your entry price, you get your stop loss, and you get your take profit numbers. Now I personally always go with take profit 1. Sometimes I close the trades before they even reach the first take profit, but if you are kind of more risk tolerant, then you can go with the higher take profit numbers. So when you're looking for a trade setup that you can use, the first thing that you need to look for is how far the candlesticks have come past the end of the harmonic pattern. So sometimes you will find a harmonic pattern and the candlesticks will be way past the end of the pattern. Now what this means is that these numbers may no longer be accurate because the market could have bounced around in between these numbers, and so that means that the trade may no longer be viable. So I wouldn't suggest, at least as a beginner, going into a trade where the candlesticks have gone way beyond the end of the pattern. Now as you can see in this example, the candlesticks have actually not gone way beyond the end of the pattern. They're kind of just at the end. So that means what we need to look at is whether or not it's hit the entry price. So the green line across is your entry price, and as you can see, the wick of the blue candle has in fact hit the entry price. So somebody who had got into this trade at this point would have already triggered this trade, and they would now be waiting for this to come back down to hit their take profit. So in a lot of cases you would actually place pending orders with this, but just so I don't overcomplicate things and confuse you in the beginning, if your candlesticks have already gone through the green line, but after hitting that green line they have yet to come down and hit the first take profit, like in this example, that means that you could enter this trade on a market execution on a sell order, because what it means is that even though it's come up and hit our entry line, it means we're still expecting it to come back down and to hit this first take profit line. So you can still get into this trade on a sell order for market execution. Now ideally you would actually identify the trade earlier than this, before it's actually hit the entry point, and place a pending order. But that's a little bit more complicated, so I'm not going to go into that right now. I just want to show you the very basics. So if you have hit the entry line, you can then enter the trade, providing it hasn't already hit the first take profit, if that makes sense. So how do we scan for different trade setups? So up here you can see two buttons. You've got the scan for M15 and the scan for H1, H4 and D1. So what this means is, if you scan for M15, it means each of the candlesticks are worth 15 minutes. And this is generally used by scalp traders. So they are people that come into the market, identify a trade, take a little bit of profit and get out of the trade very quickly. Whereas if you're scanning for 1 hour, 4 hour or D1, you are looking for swing trades, and swing trades are where you stay in the trade for a little bit longer. So if we look for another pattern on here, so let's try GBPAUD. And it just takes a couple of seconds to load the new chart. So as you can see, this is the Great British Pound Australian dollar. It's a 4-hour chart, so what that means is each of these candlesticks are worth 4 hours, and it is a bat pattern it's identified. So this is the bat pattern here. Again, if we pull our chart over, we can see the numbers a little bit better. So what this means is that the take profits are above the entry price, so that means we're expecting the market to go up. Now, as you can see, none of the candlesticks have yet hit the entry price. So what that actually means is that you could place a pending order to enter this trade when it hits the entry price and then comes back up. So as you can see in this particular example, the chart hasn't gone way past the end of the pattern, so we could still get into this trade, and it hasn't yet hit the entry price. So we have two options here. We can either place a pending order like what I've just spoke about, or if you haven't quite got your head around the whole pending order and the buy limits and buy stop things yet, what you can do is keep an eye on this chart until one of the candlesticks hits the entry price. You can then place a market execution order for buy and wait for it to come back up to your take profit 1. And that's how this works in general. So that's a very brief overview of the IML Harmonic scanner, and I will see you in another video.